I like investing in index funds, and I'll break down a few of those reasons for you in today's video. I used to have some of my personal investments managed by a personal financial planner, and I paid them a lot of money to manage my funds. One, because I felt like it was the responsible thing to do in order to grow my wealth. And the other reason is because I'm not really that interested in following the stock market and spending my time trying to figure out when to buy and sell. I just wanted a simple and easy way for my money to make money for me. And that simple way was index fund investing. So stay tuned as I share with you the benefits of investing in index funds. Hey everybody, it's me, AJ Golden, self-proclaimed money nerd and personal finance geek. And welcome to Personal Finance Made Easy. I created this channel to help you win with money by making concepts such as budgeting, saving, and investing simple and easy. Before I get into the reasons why I think index funds are the best thing since sliced bread, please take a moment to subscribe to my channel and hit that notification bell so that you don't miss out on any future videos. And also, remember to hit that like button right below the video. It helps out my channel tremendously by telling YouTube to promote this video to other viewers. And finally, if you're also into broad market low-cost index funds, drop me a emoji in the comments. If you don't have a clue what broad market low-cost index funds are, drop me a in the comments below. All right, let's jump into today's video and the 4 reasons that I like to invest in index funds. Imagine this, the year was 2007 and Warren Buffett, one of the most brilliant and successful business investors in the world, issued a 10-year challenge to the investment company industry, an industry that charges a nice sum to manage individual stock portfolios. The challenge was that over the course of a 10-year period, an S&P 500 index fund, which is far lower in cost, would beat the returns of an actively managed stock market fund account. At stake was a bet of $1 million. It was Protege Partners LLC that accepted Buffett's challenge, and both parties put up their $1 million. Protege had their most intelligent and experienced managers overseeing these stock market funds. And Buffett had his funds in a good old-fashioned S&P 500 index fund. Over the course of the 10 years, the market endured wild rides, most notably including the huge market tank in 2008 due to the housing crisis. And you want to know what happened in the end? Protege Partners co-founder Ted Cetus wrote in a Bloomberg op-ed in May 2017. This was before the end of the bet, which was supposed to end on December 31st, 2017. That Warren Buffett has won. In his words, for all intents and purposes, the game is over. I lost. Buffett not only won that bet, but the performance of his index fund far exceeded the performance of the stocks actively managed by Protege Partners. The moral of the story? You just can't beat the market. In fact, in April 2020, the S&P and Dow Jones indices published a report showing that 88.99% of large cap US funds underperformed the S&P 500 over a 10-year period. This is one of the reasons why I like to invest in broad market, low-cost index funds. My other 3 reasons are: 1, it's simple. Secondly, it's low cost. Obviously, you can't beat the market. And 4th, I really like real estate investing and would rather spend my time learning about real estate rather than in something that I can't control, like the stock market. I mean, I like investing in index funds And prior to doing so, I used to use a personal financial advisor to help me manage my portfolio. And I paid them a whole lot of money to manage my funds, mainly because I felt like it was the responsible thing to do in order to grow my personal wealth. And also because I'm really not that interested in following the stock market and spending my time trying to understand when and what to buy and sell. Look, I just want my money to make money for me. I'm always reading. And a couple of years ago, I read a book by J.L. Collins entitled The Simple Path to Wealth. Now, in his book, Collins broke down the simplicity of investing in Vanguard index funds. And this attracted me because it sounded so easy. And it actually really is very, very easy. I mean, before moving to my Vanguard account, my stock portfolio included over 100 individual stocks, and it was nearly impossible to keep up with how each company was performing on any given time. Additionally, paying someone to keep up with those stocks was costing me about 1% annually, which amounted to a whole lot of money, as well as reduction in my compound interest growth. Now, when I moved to Vanguard, instead of peering over the performance of 100+ companies, I was able to manage my investments with just 2 index funds that covered the entire market, including bonds. Whoa. Now, this was a true game changer for me. Now, by no means am I hating on those who like to actively participate in the stock market. There are some really savvy people out there who truly enjoy the excitement of stock market investing. They don't mind spending their time watching stocks go up and down and figuring out what to buy and sell. I'm just one of those who prefers to keep this part of my investment life very simple, so that I can focus more of my time on real estate. Vanguard offers me a low-cost option to managing my investment portfolio. Now, this isn't a sponsored video, although I would happily accept Vanguard to invest in me. No, I'm just someone who really likes the product. The 2 funds that I own don't require any day-to-day management, and my fees decreased from 1% annually to about 0.04%, which is a huge decrease on my investment costs. This difference is now reflected in my portfolio and improves my compound interest. Simply put, the difference is this. Let's say that I have $1,000 to invest. With my previous portfolio manager, they would have charged me $10 to manage this money every year. But with Vanguard, my cost for the same $1,000 is only 40 cents. What? Let's say I have $100,000 invested. My cost for my personal management would have been $1,000 a year versus Vanguard's $40 a year. If the stock market returned an average of 9% over a 10-year period, my personal portfolio manager would have eaten $20,843.87 out of my investment gains, versus $863.33. And I had significantly more than $100,000 invested. So for me, switching to Vanguard index funds was a no-brainer. Now, no one can truly predict what will happen in the stock market from day to day. It does what it does, and it is what it is. And the market has no feelings one way or the other about what it does to your personal wealth. As individuals, we have no control over it. And for someone like me who likes to control as many aspects of my personal wealth that I can, I just prefer to have my investment funds in a platform that will perform along with the ebbs and flows and nuances of the market. After all, over time, when you ride the market out, it typically turns out favorable for those who are patient. Now, lastly, I really do like real estate. This is the area of my wheelhouse where I can talk, read, and learn all day long. And real estate continues to hold my interest. There are so many different ways to get involved in real estate investing, and I'd just rather spend my time and energy learning about that. In this medium, the medium of real estate, I feel like that I have a lot more control over growing my personal wealth. And for me, that's attractive. So look, I encourage you to find what form of investing is most attractive for you. If you've been curious about index funds and you want to know more, post your questions in the comments section below. I love reading and responding to your comments. And if you want to know more about real estate investing, why don't you check out my real estate investing playlist where I show you how to purchase your first investment property and calculate your potential investment returns. See, my goal is to help you win with money as we go about this journey together. That's all I have for you today. So until next time, you keep living on purpose, pursue your passion, and get the gold.